If you're a profitable business owner, there's a good chance you're leaving six figures in tax deductions on the table every single year. And it's not because you're doing anything wrong and not because your CPA isn't doing a good job. It's because most business owners don't know that this account exists. Okay. And the ones who do often don't realize how much it can actually save them. Okay, so now most business owners are using a SEP-IRA or a solo 401k. All right, now these are solid accounts. The SEP-IRA and the solo 401k they cap out at $72,000 in 2026. So that's a real number in a real deduction. But a cash balance plan, it operates on a completely different level. All right. Being that they're age and wage based retirement programs, the older you are, the bigger the gap becomes. Okay. So here's what the cash balance contribution limits look like by age in 2026. And I want to be clear here. Okay. This is the cash balance plan alone, all right? We're not even talking about pairing it with a 401k plan yet, okay? That's a different video, but the numbers become even more powerful when you combine the two, okay? So as you can see here, at age 35, you can contribute around $93,000. So already that amount is substantially more than the $72,000 limit with a SEP IRA and a solo 401k, all right? Now at age 45, that number climbs to roughly 154,000. And then at age 55, you could be putting in over 253,000 in a single year, okay? In a single year. All of it pre-tax, all right? All of it reducing your taxable income dollar for dollar. All right. Now, this is very common. A profitable business owner maxing out a SEP IRA every year or a solo 401k every year, thinking they've done everything they can. Um, Really, they haven't. And sometimes they're left thinking, what else can I be doing to help me with my tax situation? And this is something that they can consider. Okay. Now, let's put real dollars to this, okay? So, let's say you're in the 37% federal tax bracket, all right? So, we're just talking federal taxes here. Here's what those deductions are actually worth, all right, in dollar figures. So, at age 35, if you're contributing that $93,000, it saves you roughly 34,000 in federal taxes that year, okay? Then at age 45, if you're contributing the 154,000, that's going to save you around $57,000 in that year. Okay. And then at age 55, if you're contributing the 253,000, it saves you close to 94,000. Now that's every single year. Okay. So we can see how powerful these numbers can be when spread across several years. So, think 5 to 10 years, just do the math and the tax savings become substantial. Okay. Now, that's not a planning exercise, all right? That's real money staying out of the man with the big red, white, blue hat, his hands, and going into your retirement account instead. Okay. Now, what I want to point out is that these are estimates. Okay, your exact number really depends on your age, your income, and really how the actuary structures the plan. Okay, so there'll be another video where I talk about the key players involved in the cash balance plan. The enrolled actuary being one of the most important teammates to have. Okay, um, and so how the actuary structures the plan that has a lot to do with these numbers as well. All right. And again, we're not even factoring in the 401k pairing yet. When you combine the two, the numbers get even larger. All right. Get even more powerful. So we'll cover that in an upcoming video as well. Now, the point is this, okay? The account is it can get a little complicated, all right? But the execution is what most people are missing, all right? And if no one has put this in front of you yet, that's really the problem, okay? So if this relates to you, you can book a 20-minute virtual with me directly. You can either do it at zenfp.com directly through our website. There's a link Also, link is in the description here. So, but with that said, until next time, folks.